What's up, guys? Welcome back. I'm gonna start doing these little daily wrap-up videos, also putting them on YouTube. Hopefully, you guys find some value out of them and able to use them for future moves and implement them in your trading and things. But my name is Cruz. I am the founder and head trader of NewAgeWallStreet.com. I'm primarily known from going from homeless to over seven figures in an awesome bull market and crazy Tesla move as well. So um, we trade primarily options and we do some equities and small caps as well in our room. Definitely welcome to come hang out with us. It's totally free if you want to join up. There's a link in the description. Appreciate if you like and subscribe if you get value out of this video. And like I said, I'm going to try to get these out here every day. I actually just put in my calendar to set reminders for me. But let's jump right in. You guys could see my screen here. This is the SPY S&P 500, and we're going to go into a little bit closer time frame right here. Um, and actually, I'm going to go into a little. Actually, this works well here on the ES. So these are the futures. On Wednesday, we had this big sell off here on Wednesday, right? And then yesterday, we kind of just went sideways yesterday, and then today we filled in that base and we put in that move up. Now, the kind of what we're thinking about here today is just like where the liquidity lies and the way that liquidity and just the market moves, right? Whenever you have a huge move like this to the downside, it creates where all of these people that were up here buying all these longs right here are now trapped because they were holding on and the market moved very sharply to the downside. So anyone that bought up in this area is now a bag holder. So that creates a lot of liquidity. If the market is to move up right here, that these long players start to go ahead and sell out at a better price than they would down here, right? So what we basically saw happen was this huge sell-off, and then we got down here to this 3,900, tested this liquidity down here in support, and we kind of went sideways, just put in some accumulation, and there's actually a gap a little bit lower right here. If we come a little bit further out, there's a little gap in between right here. So in between this like 3,900 and like 3885, I would say there's a volume gap in this area before we get into this compression and this sideways channel that we were in previously, right? So since we didn't break down right here and we didn't fill in this gap to the upside, we have to rotate back to where the liquidity lies. And since there was not enough supply to take out the buyers here in this area. So that's pretty much what happened is we put in this pretty nice little choppy day yesterday. And I was a little upset because I wanted the move that we got today yesterday. And I stopped out like 3 times, just called it a day. And then today, because today was OPEX, today was monthly expiration, I thought we were going to have a little bit more of a choppy day. So let's go over here. We're going to jump into our option chain here real quick. We're going to go over this real quick. Excuse me, I felt like I had to hiccup. Um, and we come and we look at our 390 level, right? We started off our day a little bit under 390. So I do believe actually it was right above and we dipped below 390. So we come and look at our 390 level was the key area that we're looking at as far as today. And you see right here on the put side, this is 104,000 contracts of open interest on the put side. So the dealers or option sellers are betting that this becomes support and they want the market to stay above this, right? On the call side, there's 74,000 contracts on the call side where they actually want the call sellers want the market to stay underneath this. So if the market stays underneath this, these expire worthless. They make all their premium and money, right? So what we see in the price action right here is that we get this first little dip, kind of a knee jerk reaction off the open, and then we start getting this where we held this PDC, the prior day close price, which is pretty much the same price all after hours and pre market in on the futures. It held this area, this 388.50 or so, and then it reclaimed 390, and then it was once we reclaimed that 390, all these option sellers, all these dealers right here are trapped. So they need to buy more equity, more futures, or more SPY actual shares in order to be able to offset the losses that they're getting on the contracts that they sold, or else you're going to get assigned. You have to go ahead and have those shares available to um, be able to sell, right? So if that is the case, once we've seen this here today, and the way this works is around midday, right? Like around Eastern time, I would say 11:30 ish or so. If the price has not broken back up below, and this is a setup that we've been seeing kind of as of recently for these zero DTEs, and we don't have a whole lot of data for it, but I discretionarily see that it's happening a lot. If around the middle of the day it does not break back below, in order for these guys to reclaim and be able to make their money and just maybe pin and go sideways at this 390 level, um, then we see this big move here, because then you have kind of like a squeeze, because the option dealers have to go ahead and start buying shares of futures or SPY in order to offset those losses. And you see right here where we went sideways a little bit, and then we finally got this pop right here, right at I can move this, right at about 9:30, and then we went sideways right here. We got some really nice compression. I believe at this point there was a Fed member that came online, and he started talking a little bit. This was a little bit of a knee-jerk reaction down, and then we got a little bit more news from him saying that he favors a 25 basis point increase week after next at the next Fed meeting. So the market reacted to that and was very, very bullish. But on top of that, of just that news, right? It is also Friday monthly expiration, where these huge premiums have to be correct. They have to be net zero by the end of the day, right? Or they have to be rolled over into the next expiration. So when this reclaimed here and it didn't break down to the 390, they start having to buy all this equity, and we get this nice squeeze into the close. And I think I've explained this here a couple times where we've seen this. If we go back, right here, here's another one. So the main point on this day was this 395. It ran up, they couldn't break it back below, and then we get a big squeeze into the close. And there's been a couple other examples. Here's another one. Couldn't keep it below 395. They tried a couple times, right? They couldn't keep it below this 395, which is the big open interest level of the call sellers, and then it ran back up. And you can see it did. I think there was some news. It came down right here, and but we didn't not close over that area as far as on that day, um, by the end of the day. So something I want to kind of show you guys that whenever you see that, like in the midday that we're holding a key level of the open interest, and you have a whole lot of dealers that are just trapped and they need to start buying shares in order to offset their contract losses, then it's probably a good time to go long on those positions, especially when you're at a big support or resistance level. If you're in the middle of the range, right? So if you're in the middle of this range up here, don't do it. Like, you want to do this when it's at a big support level, which 390 was our put wall. 390 was our put wall. So we knew our support was right here. Our support was this 388.50, excuse me. It broke 390 to the upside. It held, and then it kept on going and doing its thing. And so if you look at this, I actually want to show you this here. I believe I have a chart. Uh, these SPX, these SPX 39, 39, uh, 3965s here. I'm trying to bring it up for you guys. Sorry, going a little bit slow. Where is it? So these went from like 70 cents right here all the way up to actually it was less than that. It was like 30 cents. 30 cents right here all the way up to, they got to like 750. And then the 60s, I think they went from 90 cents to like $10 or something like that. So that's like almost 1,000%, like over 1,000% at the end of the day, where you could take some SPXs or SPY and make some really nice cash, right? So it's, if you're able to stomach the risk of of them potentially not moving because of the gamma and it being the 0 day to expiration, so basically you're risking the full contract, risk to zero, then that would be a really good type of trade. So something I just wanted to go over, like some really nice trades here. Also, kind of to promote our purple candles, our purple candle entries right here. So these algos are available. We do sell this indicator set. When it turns purple, you get in. You get out when it turns any other color. So the on this 5 minute chart, you would have gotten in right here, exited, in, out, and then that's it. So if you go to a bigger time frame, though, it actually stayed purple the whole entire move. And then this was actually a really nice move here. I think some people in my room actually got some 389 calls, I believe, and they got them for like 60 cents, and they went up to like, I think they went to like, I don't know, $6 by the end of the day or something crazy. But just kind of a wrap up on how to work this here as far as the open interest. When you see that there is some call, um, market makers or dealers that are trapped and the price is above that, then you have all these strikes. And this is kind of what I wanted to iterate as well, is that once you start breaking support levels to the upside in that squeeze, all these dealers start getting screwed as well. All these dealers get screwed, and they have to go ahead and buy equity, and it just forces the ticker to move a lot more aggressively as well. So uh, kind of a cool little setup that's been happening as of recently with these zero DTEs. I see a lot of people complaining about zero DTE, that it's ruined it. It hasn't ruined it. It's just that the trading style is a little bit different, and the setup is presenting itself a little bit different. So I hope that helps, guys. Make sure you like and subscribe, and we'll see you guys in the next video.